2018, as it draws to an end, very, very challenging, a very dynamic market we're seeing at the moment across a number of industry sectors, but mainly the D&O space has been significantly impacted. Andrew, what are some of the things that you've seen this year specifically in that D&O space?
Look, Directors and Officers Insurance is a exceptionally hard and complicated insurance market. What we're seeing is primarily the mid-cap listed businesses be impacted most significantly in terms of premium increases. We're seeing increases in the vicinity of 200, 300, 400%. But not only the premium increases, we're also seeing retention or excess deductible increases from $1 million, $2 million up to $5 million, particularly on that side C component, which is the balance sheet protection component of the Directors and Officers Insurance.
So what's driving this? We're talking about increases and we're seeing the changes in deductibles and so forth. What's driving that?
What's really important to remember about insurance is that it's a marketplace, okay? So regardless of how well the risk might be positioned, there's things that are out of the control of the insured. So these are macroeconomic factors that are driving the capacity available in the market. It's been driven really, we hear this term a race to the bottom. We've been in a soft marketplace for a very long time. This would be the most dynamic shift in this marketplace for 20 years. And essentially, claims activity has been driven so significantly to the point where class actions, litigation funders and plaintiff attorneys are really driving that claim environment. The capacity is being reduced, and obviously, as a result, it's a really basic supply and demand argument. There's very little supply, but there's still the same demand. So prices are going to go up.
We're seeing a fundamental shift also in how underwriters and their key metrics have changed as well, where growth by market share, writing everything at a price has really shifted, hasn't it, to now focusing more so on bottom line. And safe to say, clients are seeing their underwriters walk and coming off relationships that are long term if that pricing's not right. We're seeing quite a lot of that, aren't we?
Exactly right. And again, we heard that term race to the bottom. We've been in a very soft marketplace for a very long period of time. And you quite rightly point out, Trav, that the argument had been, okay, well, insurers go in, we create competitive tension and get them the best deal. Right now, that best deal is not necessarily about price, it's actually about getting coverage. The thing that we've done at Honan, and we've done very well, is we've invested in a trading team or a placement team. And obviously, in your role, Travis, that's been primarily very important to get our clients through this difficult time. We've been through so many examples recently where we have had to go into what we deem to be really complex businesses that are going to suffer significant increases in pricing, and managing the stakeholder expectations is so important. Most of these guys are going to have a board they need to present to, but not only that, one thing that we're finding is a huge impact. Obviously, if you've got a 200 or 300% increase in your Directors and Officers premium, you're going to have to forecast for that as well. And a lot of the time, it hasn't actually been considered in terms of the budgeting forecast, and that has a major impact on clients, doesn't it?
It does, absolutely, absolutely. At the conclusion of this year, safe to say 2019 is going to be just as challenging, if not more. There's a number of macroeconomic components to consider, but also we're seeing, again, that further shift in the market. Lloyd's, for example, under decile 10 and so forth. Your view, 2019, what should we be expecting, and how is us as a business best placed to navigate through that?
It's really interesting, isn't it? Because we use this term hard and soft market. I've been trying to probably consider it more like a market correction. I think brokers have been going into clients for the last 20 years and standing there and saying, I got you another reduction in premium. And I think if brokers had been doing that and not explaining that it was a marketplace that was soft and highly competitive, then they're probably going to struggle explaining to their clients, well, now you've got an increase. So the market correction, and to your question, I think there's more to come. I think that this has been a real significant shift. I think 2017, we started to see the green shoots of the shift. 2018 has been a massive impact year, sure. And I think that we'll see more of it as we move into 2019. The major players in the space, and I'm talking about the insurance companies, have made their stances really clear. And we're learning about those stances, and we're saying insurance company A wants to go down this path. They're not interested in this style of business. They want to impose significant increases on side C deductibles, and their rating metrics look like this. But we now know that insurance company B is interested in this space, and we can get a more competitive piece. But that that doesn't mean that they're going to see the soft numbers that we've been seeing for the last 2 decades. So the correction has certainly hit. As I said, 2017, I think we saw green shoots. 2018, the impact has been massive, and I think expect more to come in 2019. Trav, from your position, how are you seeing that, given that that's the area of the business that you head up?
In previous years, we started 2-3 weeks out. Right now, we have to start as a minimum 3, maybe 4 months out. A lot of the education happens in what I call the off-season, so outside of renewal season. We need to make sure that clients are in front of their underwriters. We as Honan also need to make sure that they're given the ability to be able to differentiate and sell their risk. Why is client A very different to client B, especially in that mid-market cap ASX market? We have the capabilities around a lot of our consulting work to be able to position clients to be able to navigate through that. From our point of view and from a placement perspective, one thing that has caught a lot of people off is just how quickly the market has moved. Certainly from the start of this year to where we are in December in 2018. Adds to the challenge of navigating through this, and I agree, 2019 is going to be a very, very challenging year. We look forward to keeping you informed as 2019 unfolds.